If you run a business in the UK, there is one number that you absolutely have to know. Ignoring it? Well, that's not really an option. It's a risk your business probably can't afford to take. We're talking about one of the most critical parts of the UK tax system, where one little slip-up can be incredibly costly. And here it is, £90,000. If your business's taxable turnover for the 2025/26 tax year goes over this amount, then you must register for VAT. There's no getting around it. And that means you're going to get very, very familiar with one specific form. This threshold is exactly why understanding what we're about to cover is essential for your business's health and growth. Hey everyone, and welcome. In this guide, brought to you by the experts over at ProTax Accountant, we're going to slice through all the jargon and confusion that surrounds the VAT 100 form. We're going to break it down into simple, manageable pieces so you can feel totally confident when you're handling your VAT. So what on earth is this form? The easiest way to think about the VAT 100 is as the main dashboard for all your VAT stuff. It's the official way you report two really key things to HMRC. First, how much VAT you've collected from your customers, and second, how much VAT you've paid on your business expenses. The difference between those two is what decides if you owe HMRC or if they owe you. So, here's our plan for today. First, we'll get the basics down. Who needs to file this thing? Then, we're going to do a deep dive, box by box, through the form itself. After that, we'll get into the really important stuff, deadlines and penalties. Then, we'll look at the common mistakes that can cost you big time. And finally, we'll talk about how to get expert help. All right, let's kick things off with the fundamentals. Who exactly is on the hook for submitting this form, and how has the whole process changed over the last couple of years? This stuff is the foundation of your VAT duties. The rules are actually pretty clear. If your business is VAT registered, you have to submit a VAT return. Simple as that. It doesn't matter if you were forced to register because you went over that £90,000 threshold, or if you chose to register voluntarily. And here's a really crucial point a lot of people miss. Even if you have a super quiet quarter and sell absolutely nothing, you still have to file what's called a nil return. You can't just skip it. HMRC expects to hear from you either way. And technology has completely changed the game here. The days of filling out paper forms and popping them in the post, they're long gone. Because of something called Making Tax Digital, or MTD, you are now legally required to keep digital records and file your return using MTD-compatible software. It's meant to make things easier and reduce errors, which is great, but it does mean that having the right software isn't just a nice-to-have, it's a must-have. Okay, now for the main event, the 9 boxes of the VAT 100 form. I know, it can look a bit intimidating at first glance, but let's think of it like a recipe. Each box is just one step in the process. If you put the right ingredient in each box, you're going to get the right result at the end. So let's walk through it together. The first 3 boxes are all about calculating the VAT you owe to HMRC. This is called your output VAT, basically the tax you've collected for the government. So, box 1 is for the VAT you charged on your sales. Let's say you're a freelance designer in London, and you invoice clients for £10,000 plus 20% VAT. That £2,000 of VAT, it goes straight into box 1. Now, box 2 is pretty specific. It's mainly for businesses in Northern Ireland buying goods from the EU. For most of us, that box will just be 0. And box 3? Easy peasy. It's just box 1 plus box 2. That's your total VAT due for the period. All right, now let's flip the coin and talk about the VAT you can get back. This is your input VAT, the tax you paid on things you bought for your business. Box 4 is where you put the total VAT from all your business purchases. So back to our London designer. Maybe they bought a new laptop for £1,200, which included £200 of VAT, and maybe they paid for software that had £50 of VAT. They can reclaim that total of £250. That number goes in box 4. And then we get to box 5, the magic number. This is the difference between what you owe in box 3 and what you can reclaim in box 4. If box 3 is bigger, you pay HMRC. If box 4 is bigger, you get a refund. This is the number that really counts. Okay, quick pro tip here, and this one could save you a world of pain. To reclaim any VAT in box 4, you absolutely must have a proper VAT invoice from your supplier. I'm talking about an official invoice with their VAT number on it. A simple till receipt or a credit card slip, that's not going to cut it. HMRC is super strict about this, so keep your paperwork perfect. The last few boxes don't actually affect how much you pay, but they give HMRC the big picture of what your business has been up to. Box 6 is your total sales, but, and this is important, without the VAT.
So for our designer, that's the £10,000. Box 7 is your total purchases, again without the VAT. And boxes 8 and 9 are, once again, mostly for Northern Ireland businesses trading with the EU. These numbers are really important because they help HMRC double-check that your main VAT figures make sense.
Okay, so you know how to fill in the form. But what happens if you don't get it in on time? This is where we talk about deadlines and penalties, because with that, timing is absolutely everything. And stay with me here, the penalty system has changed recently, so what I'm about to say might surprise you.
The deadline is the same for everyone, and it's not flexible. You have exactly 1 month and 7 days from the end of your VAT period to do 2 things: submit your VAT 100 and pay anything you owe. So, for example, if your VAT quarter ends on March 31st, your deadline is May 7th. Put it in your calendar, set a million reminders, whatever you have to do, don't miss it.
Now, the penalty system for late filing changed back in 2023. Instead of getting an instant fine, you now get penalty points, kind of like on a driving license. Your first late return gets you 1 point, a second late one gets you another. If you're filing quarterly, once you hit 4 points, bam, you get a £200 fine. And you'll get another £200 fine for every late submission after that. It's designed to catch people who are repeatedly late, not someone who makes a one-off mistake.
But hold on, that's just for submitting the form late. Paying late? That's a whole different story, with its own set of penalties. You get a little bit of a grace period, no penalty if you pay up within 15 days. But from day 16 to day 30, you're hit with a penalty of 2% of what you owe. After 31 days, that jumps to 4%, plus they start charging you daily interest. So even if you file on time, paying late will still sting. That's not all. Here's where most people go wrong. Knowing the rules is one thing, but actually avoiding the common traps that people fall into is another. Let's look at the mistakes that can really cost your business. We've already touched on this, but it is hands down the most common error, so it's worth saying again. You must have a valid VAT invoice for every single penny of VAT you try to reclaim in Box 4. Trying to claim using a generic shop receipt, or even worse, for personal spending, is a one-way ticket to getting an inquiry from HMRC and probably penalties too. The rule is just so simple. No valid VAT invoice, no reclaim. But of course, there are plenty of other traps. Forgetting about the reverse charge for services you buy from overseas suppliers is a big one. Putting the VAT-inclusive figures in boxes 6 and 7 is another classic error. Those boxes should only have the net amount. And of course, simple math mistakes happen all the time, which is why good software is your best friend. Then there's the more serious stuff like under-declaring your sales or not accounting for credit notes you've issued. All of these are red flags for HMRC. And that brings us to our final section. We've been through a lot of quite complex stuff, and it's totally normal to feel a bit lost in it all. So let's talk about the clear solution, how to go from confusion to total confidence by getting some expert help. If you're sitting there right now thinking, wow, this is a lot to handle on top of everything else I do to run my business, you are definitely not alone. I promise you. VAT is one of the most complicated bits of the UK tax system, and it trips up even the most experienced business owners. Now, you might have heard of things that are supposed to make it simpler, like the VAT flat rate scheme. But figuring out if you're even eligible or which rate to use and whether it's actually going to save you money in the long run, that takes real expertise. It's not the right move for every business. And this really gets to the heart of it. You have to stop thinking of hiring a tax expert as just another cost. It's not. It's an investment. It's an investment in your time, an investment in avoiding expensive penalties, and an investment in the financial health of your business. Really, it's an investment in your own peace of mind. So if you're ready to make your whole VAT process simple, accurate, and just completely stress-free, the team at ProTax Accountant is here to help. You can contact them directly on WhatsApp or by phone at 07985689912, or just send an email over to info@protaxaccountant.co.uk. They can help with your VAT 100 and pretty much any other tax questions you've got. And for more clear guides just like this one, make sure you hit subscribe on their YouTube channel. Thanks so much for joining us.